Good news for the home loan borrowers as the Reserve Bank of India on Wednesday reduced the key leading rate or repo rate by 25 basis points, bringing it down to 6%. The decision was announced after the central bank's Monetary Policy Committee, led by Governor Sanjay Malhotra, concluded its 3-day meeting that began on April 7th. It also decided to change the stock from neutral to accommodative. It also noted that the rapid evolving situation requires continuous monitoring and assessment of the economic outlook. After a detailed assessment of the evolving macroeconomic and financial conditions and outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. This is the second rate cut in a row following a 25 basis point reduction in February. It is also the second major address by Sanjay Malhotra since he took charge as RBI governor in December 2024. The move comes at a time when inflation has dropped below 4% and there are growing concerns over slower economic growth. The central bank has taken this step to support demand and give a boost to investment. The standing deposit facility rate under the liquidity adjustment facility was adjusted to 5.75% and also the marginal standing facility rate was adjusted to 6.25%. On the other hand, expert believes that this recent decision by the Reserve Bank of India's Monetary Policy Committee to reduce the repo rate by 25 basis points to 6% is expected to have a favorable impact on the home loan borrowers. Lends funds to commercial banks plays a crucial role in determining the overall cost of borrowing in the economy. A reduction in the rate typically lowers the cost of funds for banks, enabling them to pass on the benefits to consumers through reduced lending rates. Importantly, given that most home loans today are linked to external benchmarks such as the RBI's repo rate, a downward revision is likely to result in lower interest rate for borrowers, particularly those with floating rate loans. Also, for existing borrowers, the benefit would generally be reflected from their loan's next reset date, which is usually on a quarterly or half-yearly basis. New borrowers, however, may experience the effect more immediately depending on how promptly individual banks revise their lending rates. RBI also changed its earlier stance from neutral to accommodative. Apparently, the RBI in its latest MPC meeting held on Wednesday reduced its growth forecast for the financial year 2025-26 to 6.5%. This is a cut of 20 basis points from its earlier estimate of 6.5% made in February 2025.